Hi, good afternoon and welcome everyone to the BayFort Capital Global Innovation Portfolio webinar. I'm Ketul Satpara. I'm founder at BayFort Capital. I'll start with a few slides over here. Here's a little bit of my introduction. I am the founder and also the fund manager at BayFort Capital. We started BayFort about a little bit more than 3.5 years back. Prior to BayFort Capital, I was head of equity research at Mahindra Manulife Mutual Fund, looking at the domestic Indian mutual fund portfolios of the AMC. I did that for about 2 years. But prior to joining the Mahindras, for 20 years, I was in the US. And more than half of that, I was on Wall Street for 11 years, out of which the last 6 years I was the global infrastructure fund manager for Franklin Templeton. That was a listed mutual fund with assets or companies from 25 countries around the world. So that gave me very good exposure to global investments. Prior to Franklin Templeton, I was the founding employee of a hedge fund called Tudor Pickering. That was again on Wall Street. That was US only long short equity. And I did that for about 4.5 years. So, given this background, when I was working with the Mahindras, I saw this space where a lot of Indian investors did not have access to global stocks and portfolios, in spite of the fact that global returns were much higher than comparable Indian returns for the last 5 to 10 years also. And so that's how BayFort Capital came into being. And now we offer a global portfolio which invests in uh, innovation and disruptive stocks around the world. Before moving to that, I want to quickly introduce our team also over here. On the advisor panel, we have Puneet Shivam. He's a IIT Kanpur engineering graduate. He's an MBA from IIM Ahmedabad, and he has about more than 20 years of investment banking experience in the technology space. He's based out of New York City. And we have Jigar, who was the CEO of a company which he sold for $1.5 billion of a healthcare firm. So he has extensive experience on the healthcare side. Um, Moving on to our portfolio. So the global innovation portfolio that we are offering, it's primarily large cap companies only. Most of our Indian investors are first time global investors. So we didn't want to put them into small and mid cap volatile areas as such. And so about 90% of the portfolio is always large cap. The geographies covered, the companies that represent uh, the geographies are US is primarily about 70 to 75% of the portfolio at any given time. We have EU, we have Canada, we have an Israeli defense company in our portfolio. We have Latin America, which includes Brazil, Mexico, Argentina, Peru, and Chile. We have Asia Pacific, so Indonesia, Malaysia, Vietnam, uh, and so we go around the world looking for disruptive companies. And the outcome is a portfolio of about 18 to 22 stocks. It's a concentrated portfolio. And uh, uh, the sectors that we have invested so far are looking at AI, gaming, telehealth, autonomous vehicles, quick commerce, biotech, drones, etc. Now, how do we select these sectors? They should be in the growth mode as well as they should be in the innovation space. Now, apart from that, why we select these type of sectors is because these sectors are not available in India for investments. Uh, if you're going outside the country, there's no point in investing, say, in a Citibank or a JP Morgan or a General Motors or a Ford or a Coke or a Pepsi, right? Because those sectors are already available in India. In fact, they are higher growth in India. So why would you want to go outside India and invest in the same sectors again? So these sectors not only diversify your geography for the portfolio, when put together with your Indian portfolio, these also offer sectoral diversification because these sectors are not available in India altogether. And so that's one big reason. The other big reason is the background of myself and my team also. Prior to joining Wall Street, I did my MBA CFA from University of Texas, but in my pre-MBA roles, I was a technologist. I worked with Samsung Wireless Laboratories based out of Dallas, Texas for about 5.5 years. I have a few patents to my name from those days as well. Prior to Samsung, I was founding employee of a startup called Dynamicsoft. And within 3 years of me joining them, we were acquired by the global networking giant Cisco. So I have extensive experience in the startup ecosystem as well. I also have a master's in computer science information technology from Rochester, as well as a bachelor's degree in engineering. So, given this background, we do feel we have an edge in selecting innovative stocks and disruptive stocks for the portfolio. Now, how do we select sectors? It's as we said, there should be the growth mode. But if you see the green chart in the center of your chart, uh, typically uh, you see this type of revenue growth when a company goes through that growth spurt in the innovation space. Now, we definitely want to not, we don't want to be too far on the left where the revenue generation potential is 3 to 5 years away. Then we will not be interested. We definitely don't want to be too far on the right where it's more a matured company like a Coca-Cola or Pepsi, then that grows at GDP plus or minus 1%, then that doesn't interest us either. So we want to ideally be at the very bottom of this green arrow, but we may not always be that correct. And that's why if you draw a circle of around 6 to 12 months around the bottom of this arrow, that is where we will enter that sector. We may be 6 months early or we may be 6 months late in identifying that sector or investing in that sector. But we will certainly not be on the very much on the right hand side or very much on the left hand side. So that's our philosophy for selecting sectors where we are at the inflection point of growth in terms of those sectors. These are our returns, historical returns. Since for 3 years, we have about 27.71% annualized returns. Since inception, it is 29.72% annualized returns. Inception is slightly more than 3 years. It's at 38 months right now. And cumulative, we have given a return of 128%, which means if you invested 100 rupees with us on day one, today it would be 228 rupees. Compared to, while you compare it to the Nifty 50 or the S&P 500, we have provided much better returns. S&P 500 is our benchmark because it's the large cap benchmark in the US and we only invest in uh, large cap stocks. So that's the most appropriate benchmark for us. Nifty 50 is just for comparison with Indian stocks. We do not invest in Indian stocks, so our returns are unlikely to be close to the Nifty 50. But just to give a uh, comparative analysis of where and how our portfolio is different from the Indian stocks, it's very useful. So these are some of the risk metrics. These slides will be shared with you, so I'll not go through the risk metrics as of now. These are some of the top holdings in our portfolio, and you can see the geographies over here. Novo Nordisk is a European company. Sea Limited is a company based out of Indonesia, Malaysia, Vietnam, Thailand region. That gives you an idea about how well diversified our portfolio is. Moreover, the EPS growth, you will see the lowest one is 15%, and the highest one being 98% EPS compounded growth for the year 24 through 26, so 2 year compounded annual growth. And so that gives a very good flavor about type of stocks that we are looking for when we go around the world looking for innovation stocks. Now, having said that, these are some of the sectors that we are invested in right now. And we do feel they have high growth potential. So mobile gaming is one of them. I don't need to tell you, anyone who has children, you know how addicted they are to cell phones, and within cell phones, gaming is a big part of the time that they spend on these devices. Obviously, so far the problem with gaming was that all these games and other stuff is free. So the industry hadn't figured out a revenue model to monetize this free games that they're providing. Now they have almost 50% of mobile gaming revenues come from in-app purchases. And what I mean by in-app purchases is suppose there is a game for about a war, or and in that war there are two sides, right? And if you're playing from one side, the game itself is free. But if you want an advanced tank or advanced grenade or advanced gun to fight in that war, then those things have to be purchased. And those are easily sellable items on there, and people are paying for that. So now about more than 50% of gaming revenues is coming from in-app purchases. And we think that will continue to grow. Moreover, the entire industry is expected to grow at the rate of 13% through 2030. And that's why we are very confident about investing in this sector. And we continue to like this space. Another one is quick commerce. I don't need to tell you how easy it is to order stuff through quick commerce on Swiggy or Zomato or anything like that. And the the growth continues at, and industry estimates are anywhere in the region of 23% through 2029. However, one unrecognized aspect which we see in some of the quick commerce companies globally is that the advertising revenue. So we do feel that advertising will be more than 50% of these quick commerce companies, which right now is pretty close to zero. So advertising means any advertising that they can get on the quick commerce app. And so that part is still, I think, not recognized by the industry as much because it's not that common. But one or two companies that we follow are getting high percentage of their total revenues from advertising on these quick commerce applications. So we do feel this growth could be more than 23%, but yeah, certainly as of now, that's a good market estimate. Telehealth, I don't need to tell you, uh, global healthcare costs are spiraling out of control. They are growing at the rate of 2x to 3x inflation. So telehealth is the most easiest and the fastest way to reduce those costs. And we do feel significant growth within the telehealth space also. So that's why we like this space. AI, I don't need to tell you much. You are hearing about AI everywhere. But within AI, so about 30 to 40% of our portfolio is exposed to AI. But within AI, what we are seeing is that there is a shift. Just like any technological revolution, the first 1 or 2 years belong to the hardware segment, just like in the internet's revolution, the Dells, the HPs, the Cisco's were benefited a lot because initially you need the hardware, and then next comes software. Once everybody has access to the hardware, then the software part comes into play and the growth of software starts. And as far as AI is concerned, we are in the same phase. Now hardware access is available to almost anyone who wants it in the AI space, as in the server side. And once that is done, then the next phase is software. So we are moving from hardware to software in the AI space also. And within hardware also, the first phase belonged to the compute part. And now the second phase belongs to the more to the memory part. So we are within hardware also, we are moving from compute, which is the raw processing of instructions, to the memory side of the business. So databases, which are a part of the software side of the story, are also gaining popularity. And so that's what we are shifting towards slowly over the last 3 to 6 months. Initially, we were also invested in hardware in AI, but now we are slowly shifting out of hardware more into software. These are some of the stock case studies. I will not go into much detail, but this particular one is very exciting. It's Israeli military R&D company. Basically, the founders came out of the Israeli military, and they were the hyperspectral team within the Israeli military, and they founded this company. They are using military application for commercial purposes. And that's why we feel that we really like that company. Their technology is patented and a phenomenal company from both a management as well as a technology perspective. So we really like this company. And yeah, so this is an example of the type of companies that we look for when we go around the globe looking for stocks. Similarly, we have C Limited, we have Mercado Libre. Also, as one of the examples, we have Novo Nordisk as one of the examples. Now, and I'm more than happy to go into any of these stocks in the Q&A session, but these slides will be available, so you can definitely go through these companies at your own ease. moving on to the US economy part. I'm pretty sure a lot of people in this webinar have questions on how the US economy is going to do. So we have left a few slides over here for discussing that. So we'll discuss both the bear thesis as well as the bull thesis. The bear thesis over here is that inflation will increase because of tariffs. Net new job creation is already declining, and housing starts are also declining. So that's a net negative for uh, a net negative for the economy as such. Now, having said that, the positive parts of the bull thesis is what we also need to discuss. And for that, I think the best way to think about it is all the bad news is so far built into the stock price or built into the market because uh, the low growth in jobs as well as the low growth in the housing sector as well as uh, the higher inflation is already built into a lot of what we are seeing in the markets right now. That's nothing new. But the good news is still just about to start. It is not built into the stock price, and so that's why we do feel that there is significant potential for the markets to continue to grow from here. And what are the main points on the bull thesis side? One of the main points being that the Federal Reserve is about to embark on um, a rate cutting exercise starting as early as September 17, right? So whenever interest rates are whenever the Fed is in an interest rate cutting mode, I think those are some of the best times to invest in the stock markets in the US. And historically, there hasn't been a single time period in the past where when the Fed cut interest rates in a non-recessionary environment and the stock market returns were negative. So for all the periods when the Fed cut interest rates in the past 4 or 5 periods, the returns were always positive. Another thing that is of importance over here is the one big beautiful act that was passed, that is a tax cut. It was a huge tax cut for the corporate sector. Um, and because of this, we feel that there are two potent forces, which is the uh, monetary stimulus as well as the fiscal stimulus, which are going to really push the markets further higher in the days and a few years to follow. I'll pause over here for a moment. I think we have Rohit from Wested, and I'll if he wants to speak anything or please go ahead, Rohit. And we also have Abhishek, I think now. So Abhishek, if you want to add anything, please go ahead. Okay, fair enough. Continuing with our discussion about the US economy. So these are the two main points. And now a lot of times people also point out the valuation part of the US stock market. So I want to address it right away. If you see this chart, it's a chart of what percentage of the total stocks of each of the indices within the major countries is above PE ratio of 40. Only 14% of the US stocks are above a PE ratio of 40 while the rest of them are below 40 PE versus in other countries, many companies as a percentage of the total stock market are above the PE ratio of 40. That's why we believe the growth in earnings or the growth in the returns for the last few years in the US markets has been because of earnings growth as opposed to valuation growth. Earnings growth is always sustainable because if that continues, then it's very sustainable. But valuation-led growth may not be sustainable because there is no fundamental underlying a reason for the stock markets to go higher, but they continue to go higher, and that increases the valuation. So we believe that US markets are on a strong fundamental basis because their returns have been more from earnings growth as opposed to valuation growth. And here you will see the chart on the right-hand side. The red part is the earnings growth part. You will see China, which is the leftmost bar chart, has the least amount of red part, which means most of the returns in the Chinese stock market in the last 12 months are from an expansion of the valuation multiple. Similarly, Asia ex Japan also has very little red. US, you will see has the highest amount of red in its bar chart, which means more than half of US's returns last year were from earnings and dividend growth as opposed to valuation growth. So we are not too worried about the valuations in the US. Similarly, on an absolute basis, if you see the valuation, S&P 500 has a PE of 22.4 for the next 12 months versus the historical range 5 to 10 years has been in the 19 to 20 X range. However, important part to note is that in the last 5 to 10 years, historically, S&P 500 earnings were expected to grow in the range of 5 to 10%. Right now, it is well north of 10%. We are expecting anywhere from 10 to 13% EPS growth. So it's strongly into double digits versus in the past, it used to be in the mid-single digits range. And so a slightly higher multiple is warranted just because of the higher growth that we are expecting from earnings from the S&P 500 stocks. And that's why we do believe that valuations are not too much of a problem. We are not too concerned about the S&P 500 valuations. Now, this is the monetary stimulus that we are talking about. Absolutely phenomenal time to invest from a monetary stimulus perspective. Similarly, this is the one big beautiful act that we were discussing from a tax cuts perspective. So corporate America has received a large tax cut in this bill, where R&D expensing and capex expensing has been allowed to be done over 1 year rather than expensing capex and R&D over 3, 5, 10 years. Now you can deduct it from your income tax income in the first year itself. And because of that, the impact on some of these companies is so large. For example, if you take Google, the impact in just the first year of OBBA is about $25 billion. And to put that into perspective, Google's total cash flow at an average is about $75 billion per year. So on a cash flow of 75 billion, if they're going to get an additional $25 billion just from the tax benefits, that is just a phenomenal amount of additional money all these companies will have. And we do believe whenever they get such additional cash flow, they spend it on R&D, equipment, AI. All these are the places where this money is going to be spent. So we are very confident that will further boost the growth of the AI space, of the innovation space, especially those are the sectors that we are looking at. So I think that's pretty much it on our end. One of the things that I would like to add is that in general, global investing is very important because in US is of the total market cap of the entire world, US at any given time is about 60 to 70% of the total market cap. So while we do live in India, so investing in India is important. I'm not saying one should not do it. But if you are only investing in India, then you are only accessing a very small 4-5% of the total market cap in the world. And 95% market cap of the world, you are not investing in. And that is why it's very important to invest globally. And that's one of the biggest rationales for investing globally. Another reason most of the times for investing globally is the dollar appreciation. We have seen that if you consider the last 1, 2, 5, 10, 15, 20, you go back all the way to 50 years. Generally, the US dollar appreciates at the rate of 3 to 4% versus the Indian rupee. And so that's just a net return. That's just a straightforward return without doing anything. You get 3 to 4% if you're converting your money, which will happen in this case in US dollars. So I think these are some of the main reasons why people should invest, apart from the fact that it's good for diversification, reducing the risk in the large cap space, and the returns that are provided even by the index. And our strategy is even more high return strategy. It is very impactful to the portfolio if we mix it to the Indian portfolio. I'll pause over here for a moment. Abhishek from HDFC Securities is on our panel. We have Rohit from Vested on our panel. So if you guys want to say anything, please do so.
To all the people who have joined the call, thanks a ton for joining. This is a very different portfolio to investors who are looking forward to diversify. And with diversification, we are looking and bringing in professional management so that once you're participating into a different geography and definitely the reason and the rationale is investment which may not or be parallel to how your Indian equities will perform. And B is a professional management approach towards how wealth can be created and identifying stocks in terms of the right way. Because a lot of time, yes, there is a need of getting exposure to international markets or diversification. But the second is how or where one should invest. Is that is what we are trying to address through BayFort, through Mr. Ketul Sakpal. He has covered the entire proposition in a beautiful manner. And I'll request each one of you to please have a look into it. This is now live and on Vested app. Any customer who's looking ahead to participate can go there and apply for it. And definitely the diversification which is coming out here is in terms of stocks, in terms of geographies, and obviously what we are trying to bring on the table is an innovation in terms of exposure to the stock.
Hi everyone. So we have some questions from attendees. So we have one question. He is saying that can we invest using our vested account?
Rohit, go ahead.
Yes, absolutely. You can invest using your current vested account. You don't need to create any other account. Okay. And in the vested account, when you see on the left side of the website, there is something called as vests, right? Just below transfer wallet. So when you click on West, there'll be a lot many vests that are there, and in one of those vests, baskets, you will find BayFort Capital. And once you click on BayFort Capital, you will get to see all the information with regards to that. Like Ketul mentioned, $11,000 is the minimum amount that is required, and what is the philosophy and with which this West has been created. So all that information will be provided over there, including the graph that you are the stats that you're seeing on your screen right now, right?
Hello. Yeah.
Yes, go ahead.
Thank you so much. Thank you so much for this explanation. Another question similar to that. One attendee is asking that how to invest through the global investing account, having HDFC account, and what will be the minimum amount to invest?
Rohit, go ahead.
Yeah, I think it's the same question. Yeah, it's the same question. So minimum amount for investing in this V4 capital is $11,000. And if you haven't created the global investing account through HDFC Securities, so there are two ways to do that. If you are using your Invest Right app, you can do so by going to the app and searching for the global investing icon, clicking on that, and doing the sign up process, which takes about 10 to 15 minutes. And once you do the sign up process, you will be able to then, see the BayFort Capital West's inside. And also we have the global investing on the HDFC Securities website as well, wherein once you go to the website on the homepage, you'll get to see the global investing icon. Same process, do the sign up, get your KYC approved, then you'll be able to sort of see this vest, and after funding the amount, you'll be able to invest as soon as like tomorrow, right? So that's the process.
Yeah, okay. Thank you so much, Rohit, for this explanation. Another question related to this query is being currently invested and having invested in few stocks already. So, what will be the process to invest in BayFort in this case?
Sorry, can you repeat the question, Aishwarya?
Yeah. So one attendee is asking that being currently on vested and having invested in few stocks already.
Hmm.
Now, what will be the process to invest in this Bayford portfolio?
Yeah, it's pretty straightforward. So if you have already, like I mentioned previously, it's if you already have an account, just go to the West section on the website application, and you will be able to find the BayFort West over there, and then you'll be able to invest. So it's pretty straightforward.
Okay, okay. Thank you so much. Sir, another questions we are having, it is related to US, it is related to crypto. So the question is, since the crypto companies are booming in US after Trump's crypto policies, so does this fund also invest in crypto sectors?
So we do not invest directly into the cryptocurrency per se. However, we do invest in the crypto enablers, which means that we are following companies that are providing a marketplace like an exchange for trading cryptos, right? So we are looking at that. We are looking at some of the companies that are using crypto for payments, like PayPal is going to use crypto for payments. Now, so far it is a very small part, so it's not going to benefit big time from crypto. But if we do get to a point where a lot of PayPal revenues comes from crypto payment processing, then that will be a part of our investment universe fairly quickly. So we are observing those companies. So far, the cryptocurrencies are doing well. We haven't found a company which has an absolute moat in this business and is involved in enabling the crypto ecosystem. We are looking for enablers primarily, not directly cryptocurrency. So, yeah, go ahead, Ashwini. Next question.
Yeah, thank you so much for this explanation, sir. So another questions we are having here. So one attendee, he wants to know that do we have a USD dominant fund listed in US? I mean, he's concerned about US depreciation. Also, can he also invest through SBI mutual fund account?
Uh, I don't think mutual funds right now, I think mutual funds are having a problem where they have exceeded that $7 billion limit. And so most of the mutual funds that invest outside of the India are blocked from taking in more investment. So if you want to invest, say, 50 lakh lump sum, none of the mutual funds who invest outside India is willing to accept money because they have exceeded the RBI limits. In our case, we go through the LRS, so there is no such RBI limit apart from the fact that individual limits do apply for LRS, which is $250,000, roughly a little bit more than 2 crores on a per year per PAN card basis. Go ahead, next question.
Okay, thank you so much, sir. Can you comment on US ETF, sir?
US ETFs, yeah, they are a valid option. Our only concern would be that in an ETF, you get anywhere from 100 to 500 stocks. And so it's a very, you know, it's a very diluted way of investing in stocks versus our portfolio, you get 18 to 22 stocks, which means if we like a particular sector or a stock, you get high exposure to it, as opposed to 0.5%, 0.1%, or 1% exposure in 100 to $500, 500 stock portfolio in the ETF space. That's a big reason. And another thing is we are specialized only in the innovation space. Some of these index ETFs that you get, they are very broadly diversified. So they may invest in similar companies that are in India, like they might invest in a General Motors or a Ford, versus in India you have Maruti and Mahindra and all those stocks, which may be equal or better than the stocks outside of India. So we don't invest in such sectors or stocks which are already available in India. So ours is very complementary. So that is a big difference. But otherwise, yeah, those are also options one can utilize to invest outside India. Absolutely.
Yeah, okay. Thank you so much, sir. So we have a interesting question here, sir. So one attendee would like to know that what is the structure of this product? I mean, is it commit based of AIF or PMS?
It is something in between. It is not an AIF. It is not a PMS. It is a West on Vested Finance. That is the company that is offering this through HDFC Securities. So it is a portfolio within your HDFC Securities account. You can subscribe to that portfolio. And to a certain extent, it is like small case. I would say small case is the closest example of what West is. And so you can think of it as investing in a small case for international stocks.
Okay.
Abhishek, do you
Thank
want to add anything? Abhishek or Rohit?
Yeah, I was about to. So, there are various avenues for clients to participate. So one is a portfolio management services, which is PMS, which we talk about, where the entire decision and execution is done by the fund manager. And similarly is how mutual funds or AIF operates. So there's a professional portfolio manager who does it for the customer. Here, what we are trying to, in small case, just drawing parallel, small case, the execution lies with the investor, where though the idea will come from the portfolio manager, but the execution is dependent on the client itself and to execute. For us, I think this portfolio of BayFort, which we are talking, is really very innovative, and probably the stock selection is all done by the research team of Mr. Ketul and the entire BayFort team, and that's how they decide the allocations to different scripts. Am I right, Mr. Ketul?
Yes, that's perfect. Yes, go ahead.
Yeah. And so entire stock selection and execution also lies with you, right?
The execution lies with Vested. So the clients do get an email. They have to approve that, and then it gets executed. So there is a
Right.
small approval required, but that's it.
Right. So it's a client consent portfolio. Once the client needs to give a consent on change of allocations to one script to B, A script to B, or it could be multiple scripts, and that's how the portfolio gets rebalanced to the new strategy. So that's how the portfolio keeps on evolving over time. And so, Mr. Ketul, what is the approximate duration, or in how many rebalances you get in a month or a quarter or so? Normally,
Generally, at an average, it's been about one rebalance in 30 to 45 days. That has been our average so far.
okay. And that's executed by a click of a button, sir.
Correct. Yes, absolutely.
Right. So client is engaged in a frequency of 30 to 45 days, and then he needs to give a consent to rebalance, and then on the back end, the rebalancing is done from the vested platform to in the client's portfolio. That's how this entire things operate. So at a unit level or a client level, these entire stocks are owned by the customer. There's nothing which is owned or held with the BayFort. So they create the portfolio, client execute the portfolio, the entire portfolio gets created for his account, and then subsequently, even if he, though we don't advise because we want him to play within the portfolio, but definitely he can multiply his exposure to one of the script, or he can have a lesser allocation to one of the script. But the objective is to work as per the portfolios to so that we know the weightages are the right in which we want you to participate, and that's the entire spread. Yeah, sure. Yeah. So I hope I have answered the question. If this is something still to be addressed, we can definitely talk about.
Yes, Ashwini, you can move on to the next question, please.
Yeah. So, sir, we have lot of questions regarding to the tax. So, could you please explain about it?
Yes, certainly. Taxation after 2 years is so it is long term and short term. Long term is defined as 2 years for international stocks. And after 2 years, the taxation is same as Indian stocks. It's 12.5% LTCG. And anything below 2 years is in short terms. And short terms for international stocks is it goes into your regular income bracket. This is taxation in India. Any investor who is based out of India, is a resident of India, has to pay these taxes on foreign income. There is no taxation or any tax filing in the US because US does not uh, charge capital gains taxes to non-residents. And so consequently, you don't have to do any filing or there is no tax in the US. So that's pretty much on the tax side. Abhishek, you want to add anything?
Yeah. So no, I think that is it. As far as one more step is concerned, is there is something called TCS. Any client investing beyond 10 lakh rupees, there's a TCS which client needs to pay. Well, this TCS can be claimed immediately in the tax filing of advanced taxes. So obviously, we are talking about HNIs who do advanced taxes payments every quarter. So if a client is transferring just for calculation purpose of say $1 million, and there is a TCS amount deduction. That deduction he can claim while he's filing the tax in the subsequent quarter for the previous quarter, and then he can claim that back. Yes, obviously the investment will be minus TCS, and then it will your transfers will get pooled into a vested account, and from there the client can allocate as much as he wants on the portfolio under West for BayFort. So this is how the step-by-step things. So in fact, that's not called tax, but yes, that's a TCS tax collected at source just for regulatory purposes. So there's no tax actually. The impact is negligible.
Yeah, thank you so much, Mr. Abhishek, for this wonderful explanation. So let's move on to another question. So, sir, we have this another questions. So, one attendee want to know that what type of investor that we are targeting at, and also they want to know that what type of response we are getting as of now, according to the current market situation. So could you please also speak about it, sir?
So I'll probably talk about so any client because there are I believe there are a lot of clients on the call, and they want to know what probably the investment horizon should be. So any client who's looking forward for any exposure into volatile equity market, would be India or globally, you should have an investment horizon of 2 or 3 years more, and that's where you can be relatively confident that yes, the outcomes will be very favorable. Obviously, market has been rewarding over at least the US market has been more rewarding of late, and 1 year for Indian equities has been bad. But for anybody, as a general rule, somebody who's investing into equities should invest for long term and not play a short term strategy. So that is how. So any client who's ready to park his funds for a longer duration, and probably you can tag these investments for various goals, which could be as simple as having a dollar denominated asset which could be linked to a foreign expenditure which is expected across, maybe related to child's education, or buying a second house into an international market and all that, because the entire appreciation, the entire working happens on a different currency, which is USD compared to INR. So that is for any customer who's looking at it to participate. As far as the flow is concerned, we have just started with the BayFort, but yes, Ketul will tell how things are. They already have huge amount of customers who have participated there. Ketul, please tell us about it.
Yes, yes, absolutely. So we have more than 250 customers now, and the response has been just phenomenal, especially the AI space. Anybody who is interested in innovation and AI, they have really, come forward, and the response has been just phenomenal. And so, yeah, I think even from a global equity market perspective, the fund flows into the US AI space as well as the other sectors in terms of equity fund flows has been just phenomenal. So yeah, overall, very good response, and we have been this journey now for about a little bit more than 3.5 years. We have doubled our AUM in the last 8 months or 9 months. So that gives you an idea about how good the response has been in the last 8 to 9 months. Possibly. Aishwarya, you can go ahead with the next
Yeah.
question.
Next question, please. Yeah.
Yeah, thank you so much, sir. So we have few questions regarding the portfolio, and they want to know whether they can sell this portfolio by any time, or do they have lock-in, or what are the charges? So we received some questions, sir. Could you please elaborate that?
Rohit, do you want to answer that if you're around? Yes, Rohit is there.
Yes, I'm around. So, with regards to the minimum investment is $11,000. The lock-in is for 2 years, and this basically there is a fee that you would be uh, paying in these 2 years. So there is a upfront purchase fee of 3.21%. Okay, and then every month we would be charging you a certain percentage, which is 0.06%, right? So if you look at the total the number of money that you would be paying as fees over the 2 years, it would be somewhere in the region of you know uh, 4.75%.
So it's
Whether you want to add that?
so it's about 2.375 per year. I think that's the calculation roughly.
Correct. Correct.
And what will be the churning of this portfolio, sir, within a year?
Yes, so our churn is typically less than 20%. That's what we have seen in the last 3.5 years. So the churn ratio should not be more than 20%. And as we said, the rebalancing will be anywhere once in 30 to 45 days. That's our expectation.
Okay, okay. Thank you so much. And one attendee also want to know that after deducting all the charges, what will be the return? So, sir, could you please explain that?
Yes, so for that, I will just lead you to a slide that has been our historical returns, and we do expect that going forward also. Are you able to see the slides, Aishwarya, on the screen, the
Yes,
returns
yes,
slide?
yes, it is there, sir.
Yes, so that has been our return. Just to clarify, the 3 year return is annualized, and the last 1 year also is annualized, 19.64 in the last 1 year. Last 3 years is 27.71 year annualized. And since inception, which is a couple of months above 3 years, is 29.72% annualized. For a cumulative return, which means if somebody invested 100 rupees on the first day with us, his total account value would be 228 rupees for a total return of 127.97%. And this is after fees, pre-tax. I think, yeah, that's it. Ashwarya, you can go.
Yeah, okay. And sir, what will be the currency conversion charges in this?
Rohit, you want to answer that?
Yeah. So currency conversion usually happens when you're depositing money to your global investing account, right? So the way it works is when you open the global investing account, you will need to connect your HDFC savings bank account to the platform. It's a very, seamless process, a three-step remittance process. Those who have already created their accounts, they would be very familiar with that process, right? So when you are depositing or remitting money under the SLR scheme, uh, you are essentially, remitting dollars, and once you deposit dollars into your global investing account, that is, where the conversion happens, right? So HDFC Bank will essentially convert your INR to dollars. Obviously there is a blended FX markup fee that would be charged, which will then be converted to dollars, and then the dollars get deposited. And usually we have seen this conversion to be in the range of 1.2 to 1.5%. So those are the additional things to keep in mind when you're remitting money and depositing money on the global investing plan.
I would like to add that this is a one-time charge. Every time there is trading going on, the money doesn't come back to India. So the money stays in the vested account in US dollars. So only the first time when you transfer money, and then subsequently when you get the money back into your HDFC account, only that time it is charged. And one of the other things we like to mention at this point is even though that charge might be 1%, the thing is the rupee depreciates at the rate of 3 to 4% per year. So you will recover that 1% in the first year itself and a lot more when if the rupee depreciates at the same rate as it has done historically. Then you're going to gain 3 to 4% just from the rupee depreciation. So 1% is immediately recovered fairly quickly. So, Abhishek, do you want to add anything to it?
Yeah. Though I believe I think that's well explained. In fact, the client whomsoever is looking forward to participate, he should look forward for long term. That's because fluctuations will come during during the journey of the investment. But primarily, what we are trying to address is if the client is diversifying, he's on an overall basis, he is very well balanced in terms of his overall exposure. So though there has been, and the history has proven that there has been parts where different markets behave differently, but yes, on a one should not look at as only as the charge basis or the conversion basis, but one has to look at as a diversification basis. I will probably emphasize more on that. Uh, and something which can really generate alpha on over the benchmark. So these are the two things one has to look forward for. As history has proven, BayFort has the current portfolio has created alpha, and we expect the good work of the team, and it's the process which goes inside creating something which really results into better results rather than keeping finger crossed for the luck. And that's where any professionally managed portfolios are relatively have a lesser downside risk and more upside possibilities.
Thank you, Abhishek ji, for this explanation.
Yeah.
Sir, we have a question over here that suppose if an investor invest in this fund and later on he want to top up, so what will be the minimum amount for top up?
Rohit, go ahead. Hello. Yeah, I'll take that. No worries. The asset there is no minimum amount, I think, but ideally we would prefer somewhere in the range of $1,000 and more. So that can be fairly easily deployed anytime you want to invest. But anything below 1,000 will not be very material. So I think you should keep it at that. There is asset. There is no particular limit on the minimum investment. Subsequently, the first time it's $11,000, which is about 10 lakh rupees, but subsequently there is no such limit, I guess. Abhishek, do you want to add it?
No, I think that's it. So one can keep on adding. Obviously, if you are creating a portfolio, you definitely need to invest more. And my whenever I interact with a lot of customers, I'll only request them to participate. That is meaningful to you also. Instead, just tasting, because it's not about because even if you are investing, say, 10 lakh rupees or $11,000, if you have different corpus or different aim in terms of returns, one has to participate meaningfully for any asset class, for that matter, to actually have the entire impact of that specific participation. Otherwise, it becomes, 1% of your portfolio if you participate out here, even if it doubles in 3 years, the way it has done in past. Uh, one becoming two will not have your overall, will not give overall uh, alpha to the overall portfolio. So one has to participate meaningfully, and we definitely say any Indian investor should look at participating more than 10 to 15% globally, if not more, um, to start with.
Thanks for clarifying that, Mr. Abhishek and Ketul sir. Sir, can you explain this rebalancing question again? That one participant wants to know that frequent rebalancing, does the fall under short-term gain capital, or it does work like mutual funds?
So since the stocks are owned in the client's own account, it does fall under short-term capital gains. However, if you see our 3.5 year history, our rebalancing has generated very little short-term gains. Most of the gains are in long-term only, and less than 20-25% of the total gains are in the short-term bucket. So we don't expect a lot of short-term gains. Most of these will be long-term gains. We do trade once a month or once in 45 days, but that trade is not like we are changing all the 22 stocks, right? We will change 0.5% of one stock, 0.5% of another stock. So the changes are also minimal, and not all changes generate obviously positive capital gains. There are some negative capital gains also. So the net effect of those trades is not huge, especially since the percentage traded is very small. Abhishek, Rohit, you want to add in?
Yeah, I mean, you're 100% right. So normally the churn comes up like that entire portfolio will be shifted. That doesn't happen like that. So of your 100 rupees kind of a portfolio or $100 kind of a portfolio, probably a $2 can be a shift. Those $2, if would have gained 10% also, that's just a 20 cents kind of a gain. And around that 20 cents, even if you pay 30% kind of a tax, there's hardly any impact. And please note, you have to pay tax only on the gains and not on the losses. So eventually, we also take into consideration how the churns are. But frankly, and once, as Mr. Ketul is saying, there are a lot of scripts which we want to hold on for investors for more than beyond 2 years. There you get 12.5% kind of a taxation, things which needs correction, because the entire portfolio is not made in a sense that there's a tax advantage, or we want to churn the portfolio, not to churn the portfolio because of short term, long term. It's primarily it's about stock hitting the target, stock meeting the expected numbers, and then any different opportunity to capitalize on. So any client, I don't think so any client should bother about it. One should remain invested, because that's how the entire PMS and the other worlds also work. And uh, I don't think so that it's a challenge, but yes, happy to discuss on that.
Okay, okay. So we'll move on to next question. So will client get the performance report like PMS, AIF, and can the portfolio will be tracked in real time portals?
Yes,
Client
Rohit,
can, yeah. So as I think these stocks will be bought for the customer, so he can track it by himself, and it's his own portfolio, its own list of scripts which will be lying in his vested account, so he can track it on the real time basis. But so beyond that, I don't think so. We share something, but Mr. Ketul, if you can share, yeah.
yes, yes. I think, as you rightly said, the stocks are in the client's own account. So anytime you take a statement, you will see the returns. And those statements you can get monthly, weekly, quarterly. And obviously, I think Rohit can throw more light on it, but they do send out statements. How often do you send out statements, Rohit?
Hey, hi guys. Statements are readily available on the platform itself, and you can download it from the profile section. And there are account statements, profit and loss statements, statements as well. In fact, whenever you're making a trade, we send out an automated email itself that this trade is placed, right? Obviously, when the tax season comes, you will definitely need all the tax documents. So we have a dedicated section on our portal itself where you can download all the documents related to tax, which you'll need to file with our in such a way that you just have to download it, give it to your CA, and they'll do the needful, right? As far as your long-term and short-term capital gains are concerned, right? So these are the things that we take very seriously, ensure that we make lives easier for you, so that all you need to focus on is investing and building your portfolio globally.
Yeah,
Ashwin?
thank you so much. Thank you so much, sir. Uh, Sir, we have another interesting question. So, one attendee want to know that because of the current market situation, are there any hedging practices that this fund uses?
Yeah, so there is no hedging per se. Indian investors are not allowed to short or use derivatives or use FNO in international markets. That's an RBI restriction. So consequently, we don't do that. And that is why this is a long only portfolio. And and as of now, we are quite bullish on the stocks as well as the sector that we are investing in. So there would be no reason for us to hedge either. But this is not a hedged portfolio by any chance. This is a long only portfolio. Abhishek, Rohit, you want to add anything to this?
Yeah, I think it's fairly simple. Hedging is primarily when you are thinking against the market and you have but here we are fairly bullish on whatever we are selecting as a portfolio of this in terms of scripts, and the opportunity of hedging is primarily for a shorter term event, probably a quarter or a month kind of a scenario, and here we are talking about investing fairly for long term. So no need to hedge any long-term portfolio. It really reduces your risk. Sorry, though it reduces your risk, it adds to your cost and net. Eventually, nobody gains. So it's hedging is specifically events oriented. So I don't think so. This portfolio approaches that, and obviously, Indian regulation doesn't allow Indian investors to use derivatives to participate. If somebody really wants to have such kind of a portfolio, there are other portfolios available, not in US. There are some ETFs also available, but that's a different discussion altogether.
Thank you so much, sir. Ketul sir, could you please tell that what will be the trading hours?
The trading hours are this depending on the daylight savings. Right now, the market start at 7 p.m. India time for US stocks and end at 1:30 a.m. But during daylight saving time, it goes to 8 p.m. and consequently 2:30 a.m. also. But you can trading is for particular stocks, but otherwise you can place orders on the um, Vested platform, I think throughout the day. Rohit, do you want to add to that?
Yeah, absolutely. So you can always place the order, so you don't need to worry about when the market opens or closes. Uh, Ketul rightly mentioned. So that and just invest the that you add. But you can also create a recurring investment, which is the SIP, this particular uh,
Mr.
BayFort
Rohit, sorry to interrupt you, but
capital
your voice is
costing.
not clear. Mr.
Can you
Rohit,
hear me now?
sorry to interrupt you, but your voice is not clear.
Is this any better? Can you hear me
No,
now?
it's still breaking.
Uh,
I think
I'll just summarize what he said. I think, Abhishek, you were saying something. Sorry, I interrupted.
Yeah. So no, I think Rohit has addressed. So client can create the portfolio at any point in time, and so that's not a concern in terms of trading because the portfolio needs to be created and it's kept for a longer term. It's not about buying a stock at a specific price. It's an entire portfolio basket of 22 odd scripts. So there's no point in timing because not every script will be plus or minus. There's no point putting timing on it. So one can buy it as soon as one's funds are ready, you can put it immediately participate.
Okay, okay. Thank you so much for this explanation. So we'll take another question. Is it possible to invest into from UK or with UK ISA account, and how?
Yeah, I think Rohit could take it, but in the interim, yes, you can if you for any non-Indian investor, NRI investor, if you have an overseas account, you can open a vested account through us, and then you can directly transfer from your overseas account to the vested designated account uh, into the currency in where you are dealing, and that will be converted into USD to participate. And similarly, when you are redeeming, the same process can be adopted. You don't have to remit funds in India to participate. And similarly, once you redeem, you don't have to park anything to Indian account and then take it away. So the entire transaction is like that and seamless. I think Rohit is there. Rohit, if you want to top up
Yeah,
on.
yeah. So basically, if you are an NRI, you can basically deposit the money through your NRE NRO accounts. Also, if you let's say have a international sort of a dollar account, so you can invest through that dollar also, so that there are no basically the currency change rates from INR to dollars. You will be saving on that as well. So we have seen many clients who have international dollar accounts directly depositing onto a global investing platform, and they invest stocks, ETFs, baskets, and any instrument that is available on the platform, right? So that is how you can do it.
Yeah, thank you so much. So one attendee want to know that will invested amount be insured? I mean, although it's a equity, but sir, can you? It will be better if you explain this.
Rohit, you want to go ahead?
Yeah,
Abhishek?
yeah, sure. So I'll take that question. So basically, when you say insured, that's a very broad question, right? So let me take a doomsday scenario and try and answer this question, right? So now, many clients fear that okay, I'm investing in investing platform. Now let's say, what if Western platform shuts down? Okay. Uh, and consequently, also, what if a driver who's the broker in the US who acts as a custodian they shut down, and what happens in those scenarios? So then I think I'll be doing justice to that question. So firstly, if Vested starts in to big stocks, custodian that is driver in the US. Vested will never have access to your stocks or the cash, right? We are giving you the platform, the service that you get a good experience. Having that will be the custodian. They will have your depositing on the now in the scenario if driver shuts down, what happens? Now in that scenario, there is a protection provided by SIPC. So SIPC is a regulator in the US, and they provide a protection up to 500,000 US dollars account. So if you're opening an account on name, you will have a protection up to 500,000 US dollars, which includes $250,000 in cash. So that scenario,
Rohit, your voice is breaking. Abhishek ji or Ketul sir, could you please carry on this question?
Sure, I'll summarize it. There is a SIPC protection up to 500,000 US dollars. So it's pretty much insured to quite an extent as well. And that is from SIPC is a industry organization, so it's very well insured. Uh, for to 250,000 US dollars. And then there is, and that's all the assets in your account, and that is on a per account basis. So I don't think that's a big concern. Per se. And the US sector as is being regulated by SEC, and they have been through many of these episodes. So it's a highly regulated sector, and the chances of a default are extremely low. That's what I would like to add.
Yeah, thank you so much, sir. So, yes, this session is recorded, and we are recording this session. And also, one want to know that can he get specialized guide?
Specialized guide in terms of.
So it's not specified clearly. Well,
Okay, okay. Yeah, so we don't create specialized portfolios. This is the same portfolio that everybody gets. So across the board, everybody gets the same portfolio. And that's why there is no special portfolio. And we do feel that it would not be very good to specialize because we take care of the risk management very well. We manage the beta of the portfolio. We manage the correlations between the stocks. So if we do anything specialized, that will really mess up with the portfolio construct. And that's why we strongly recommend against doing anything specialized uh, with respect to our portfolio. So it will be a common generic portfolio for everybody. Abhishek, do you want to add anything?
So I think probably you covered specialization. I couldn't, in fact, I was also guessing what could be the thought process behind. So this portfolio is available for all the investors who participate. Obviously, once the day you participate, say I participate on day one and you participate on day fifth, my buying price and your buying price could be different. You can get a better price or whatever. So to that extent, yes, your portfolio remains the same, but your entry levels will be different, and that is what we do. And anyways, if there is anything specific which if there's thought process in the client's mind that you want to ask about a specific stock or things, probably you can write up to a team with Vested, and we'll be able to guide you on that. As far as this portfolio is concerned, it is available for anybody who participates, and the same portfolio will be available.
okay, thank you so much, sir. So another question is for Ketu, sir. That, sir, do you have any particular schedule for rebalancing?
No, we don't have a particular schedule for rebalancing. So it depends on any stock price movement, right? If something goes wrong with a stock, then we may sell it. If a stock does very well and it becomes expensive, then we may sell it, but that is not under our control. So we don't go by a schedule. But as I said, during times of high volatility when Trump was introducing tariffs, our rebalancing was a lot higher. We did probably once in 15 days or once a week because of the frequent changes in what Trump was saying. But outside of that extraordinary window, our rebalancing has been once in 30 to 45 days. Typically closer to the end of the month rather, and the first week of the month is when we would rebalance. I think you can think about it that way.
Okay, okay. So that's pretty much it, sir. So I have already avoided questions specific to particular company. So that's it. Most of the answer you have already explained it in previous in your explanation portfolio. So that's it, sir. Thank you so much, sir, for this lovely explanation.
Thank you.
Thank you.
Abhishek,
Thank
you
you very
want
much.
to do the closing thing?
Yeah. Nini, I really thanks all the customers who have taken time to join this. I'll request you to go on the platform, watch this go invested. If you don't have an account, please do open an account and look at to participate. Uh, and participate meaningfully for a diversified kind of a portfolio. And thanks, everybody. Thanks, Ketul and Aishwarya. And I think Rohit got dropped out, but yes. And in case any queries or any questions, you can write to your relationship manager or to us at HDFC Securities. We will be happy to get in touch with you all. Thank you, everyone.